Know the difference with Annex Wealth Management? You want your investment and retirement planning partner to be on top of it. Case in point, the new Wisconsin state budget that Governor Evers signed. It's got personal finance implications via tax cuts that are central to the budget. We felt it was a great time to share what we know with our listeners. To discuss it, let's welcome Eric Strom, CFP, Senior Financial Planner at Annex Wealth Management. Welcome back, Eric.
Hi, Danny.
Off the top, this is not a political segment. This is a nuts and bolts, what do we need to know segment. Eric, it stirred up a lot of talk. That's what you said.
Well, it certainly has. And of course, there's a lot of political discussion about the ramifications. But today we're setting that aside and just talking about the personal finance implications of the most recently passed budget.
Let's start with what is called a significant state income tax cut. Who is affected?
Many people are affected. This is a significant state income tax cut. If you are single and you make more than about $24,000, if you're married and make more than about $32,000, then you will have a tax cut. Now, the tax bracket that's being reduced, Danny, is a very large tax bracket. So income from $20,000 or $30,000 all the way up to several $100,000 is all having a tax reduction. So even higher income taxpayers will be seeing a significant tax reduction as well.
When does this kick in?
This actually kicks in immediately for the current tax year of 2021 as well as next year too.
This means less tax revenue via state income tax. How much exactly?
These main income tax cuts are going to cost the state of Wisconsin $2.4 billion over 2 years. So that gives you a sense of how significant of a tax cut this really is.
And what's that mean for families?
It really depends on your income level, Danny, but for a typical family in Wisconsin, this is going to put hundreds of dollars in their pockets. If you're a higher income taxpayer, if you're making $200,000, $250,000 or even more, this tax cut is going to be quite significant. We're talking, thousands of dollars in your pocket.
Do we need to redo withholding? Anything like that?
Well, it's interesting that you bring that up, Danny, because what has happened is every time you get a paycheck, there's some money that's being sent to the state, right? That's withheld from your check. So the withholding tables behind that are not actually changing. So your check that you get, next week or the week after is going to have the same level of withholding as it did before this tax cut was enacted. But then when you go to do your taxes next year, that's where you're going to see a larger refund. Do you need to adjust your withholding? I mean, we can talk about that more when we get into the planning side of it. For many people, if you don't do anything, that withholding is going to stay the same. And that's an interesting aspect to this bill.
In the next couple of years, property taxes will be cut. How's that break down?
Yeah, so the other large tax cut is a $650 million property tax cut. So again, this is going to depend on your circumstance, but the typical homeowner in Wisconsin is going to see about an average of $100 reduction in their property tax. Of course, depends on how valuable your home is and your personal circumstance.
We're with Eric Strom, CFP and a Senior Financial Planner at Annex Wealth Management, covering the cuts to the Wisconsin state income tax signed recently by Governor Evers. Let's talk about the financial planning aspect.
Yeah. First of all, if you are someone who makes estimated payments to Wisconsin. For example, if you're a business owner or a professional who makes estimated payments rather than withholding, then you may want to reassess how much, because again, this is a pretty significant tax cut, so you might not need to be paying as much as you were before. And similarly, if you are someone who you have a regular job and you're not making estimated payments, but you have withholding coming out of your check, this might be a good time to reassess how much is being withheld now that we're in a lower tax environment. And one other aspect for people who are engaged in tax planning strategies, with many of our clients, we are discussing strategically accelerating taxes into 2021. That might be doing Roth conversions or gain harvesting. People who are doing that, we're oftentimes helping clients with what the tax burden will be on the state side. And now that we're in a lower tax environment, which, we weren't expecting this to happen, but now that it's here, if you are someone who's been going through that tax planning, it's now a good time to reassess how much you're paying on that state tax side. So that's an important thing to discuss as well with your advisor.
It's all about planning, and that's what we do day in and day out for all of our clients. We say it all the time, know the difference with Annex Wealth Management. Take us up on that free portfolio review. It's a great way for you to see how we operate. Zero obligation on your part. We're confident when you're part of the fee-only fiduciary family at Annex, you'll move through the rest of this year and beyond with confidence. The website, annexwealth.com. Click that Get Started button. Eric Strom, CFP and a Senior Financial Planner at Annex Wealth Management. Thanks for getting us up to speed.
Thanks, Danny.